Indian stocks surged to recover strongly on Wednesday after erasing $386 billion in market value in the previous session. Analysts are looking beyond the election results but warn of volatility and more losses. The Sensex index surged over 2.300 points to end at 74,382. And the broader Nifty closed nearly 3.4% higher at 22,620. Now, the Sensex and Nifty opened in the green, but extreme volatility was on display in early deals. But both indices closed over 3% higher, and this comes a day after nearly $400 billion were wiped off the Sensex index. Risks are still at play with many uncertainties about the formation of a Narendra Modi-led coalition government, and still the run-up on Wednesday points to a strong recovery. Analysts say Indian stocks will look past the uncertainty caused by elections as the nation's earnings and economic stories are still intact. Goldman Sachs Group strategist, including Sunil Kaul, wrote, and I'm quoting, "We remain constructive of Indian equities and see this weakness as an opportunity to accumulate." However, the bloodbath on Tuesday was driven by tallies that showed Prime Minister Narendra Modi's ruling party struggling to win a majority of seats in national elections. And this is a stunning result after exit polls showed he was on pace for a landslide victory. Investors raised questions about the new government's ability to push through politically difficult reforms with a thin margin. These reforms are seen as crucial to sustain India's economic growth, already the world's fastest. A strategist at UBS said, as BJP does not have a simple majority, the bargaining power shifts materially within the alliance. Further said, most scenarios from here could be taken negatively by the market compared to expectations last week. Nonetheless, some investors are banking on continuity in the government's infrastructure and manufacturer-led drive to boost growth. Now, Chief Asia strategist at Bank Pictet said, and I'm quoting, "I still think the policy direction of Modi will likely stay, which should support India's economy in the longer term." Now, those thoughts were echoed by other analysts too. As volatility eased on Monday, India's volatility indicator, the VIX index, a gauge of 30 days, slumped more than 20%. And this comes after the index surged to more than a two-year high just on Tuesday. The rupee traded near a record low touched in April after falling by the most in a year in the previous session. Strategists at Morgan Stanley wrote in a note, and I'm quoting, "We expect realized and implied volatility to EBB in the coming days from its level on June 4th. They added that the ruling alliance has passed the halfway mark and is likely to form the next government. For all the latest news, download the WION app and subscribe to our YouTube channel.